Good evening, I'm Shraddha Babla and you're watching What Did You Miss on Bloomberg Quint Live, where we bring you the highlights of the day that went by. But before we can get to the market headlines, here's a Bloomberg Quint exclusive. This week marks 12 months since that fateful day the Narendra Modi government announced demonetization. In an interview to Bloomberg Quint, the former Prime Minister Manmohan Singh talks about the impact of demonetization on jobs and income inequality in India. He says, and I quote, "The rising inequality has been a constant threat to our nature of economic development. Demonetization may exacerbate such inequalities, which can be harder to rectify in the future." You can read that full interview on our website, bloombergquint.com. But it was a flat close for the Indian equities. The Nifty ended below 10,500. Consumer durables shined in trade while ONCs suffered losses. Titan surges in trade as investors cheer strong Q2 numbers. The jewelry to watchmaker beats street estimates with a 67% jump in profits. Brokerages give the stocks a thumbs up. And it's a strong debut on Dalal Street for Reliance Nippon Life, India's first asset management company, lists at a 17% premium. And West Bengal Chief Minister Mamata Banerjees ups the ante against the BJP, calling GST great selfish tax which was put in place to harass people. She also takes a dig on demonetization, calling the move a scam. And 714 Indians make the list of entities having registered businesses and assets in tax havens. The second biggest leak of financial data ever is dubbed the Paradise Papers. Let's start with Indian Bank, which has reported its earnings today. It was a strong show in the September quarter. We're being joined by Kishore Kharat, the MD and CEO of the company. Sir, if you could tell us what has driven the improvement in the gross NPA number in this quarter?
If you see, we have contained the slippages. Our slippages in Q1 were more than 700 crore, which has come down to less than to around 350 crores, which is almost 50%. We have contained the slippages. That is one part of it. Another is we are actually pushing for the recovery. Recovery from the smaller account is our focus, and therefore the absolute term also there is a reduction into our gross NPAs. And because of better provisioning and all, our net NPA also has come down to 3.41%.
So where do you see the gross NPA number by March 2018 then?
March 2018, our endeavor is to push it further down to less than 6%. So actually from 7.47, we had anticipated that at least by 150 basis points we will be reducing in a year's time. We are working on the same. It has come to 6.67. Next quarter, if we are in a position to push it to, let's say, less than 6.5, 6.3 or something, then definitely less than 6% you can see by March 18.
So could you throw some light on how the agriculture and the MSME segments have done in this quarter, and also if you could share the gross NPA numbers specifically for these segments?
Gross NPA in both the segments, we are not seeing much growth actually. Very little it has improved, rather increased. But otherwise, agriculture in Tamil Nadu also, despite growth we are on in all states rather, our recovery percentage is quite good. We have shown good growth in agriculture, almost 13%. And then in MSME also we have shown close to 29% growth. And if you look at it, actually the gross NPA in agriculture has come down. Last year it was 2.5% of total 7.27. It has come down to 2.19%. Insofar as MSME is concerned, there slightly from 6.86% of the sector, it is gone to 7.08. So few basis point we are seeing NPA percentage. There is no spurt actually in the NPAs in both the segments.
All right. So the results release talks about RBI's first list, but what is the exposure that you have to accounts under RBI's list and the provisions that are required to be made for those?
Yeah, in the second list we have exposure to 10 accounts total. That exposure is around 1,813 crores. So all put together exposure is not that high, therefore there is not much pressure on the provisioning also. And out of this 813 crores, we already had in the provision of 364 crores. So remaining provision what is required is hardly 130 crores.
What are the capital requirements for FY18 and FY19, and how much capital do you think you will get from the government?
Government, how much capital I will get still yet to be worked out, because government has not indicated so far how much capital they will be allocating and on what criteria they will be allocating. But insofar as our standalone basis capital adequacy is concerned, as of now we are quite comfortable. We are having roughly around 13.16, but if you add back my profit, it will be again, as of September itself, it works up to 13.76. So which is well above the Basel norms. Secondly, if you look at our capital composition, our equity itself is roughly around 95%. And then looking at the government holding up 82%, and if the government wants to reduce it, then we have a great headroom for raising the capital. 81 Tier 2, absolutely there is a good headroom available. So on capital front, we are quite comfortable.
All right, Mr. Kharat, thank you very much for speaking with Bloomberg Quint. So that's what the management of Indian Bank. They expect the gross NPAs to fall to 6% levels by March 2018. But it's been a muted day of trade in the markets. The Nifty ended the day with marginal dip but managed to hold on to the 10,450 level. Now, broader markets, however, outperformed the benchmark indices and ended the day with steady gains. Let's head across to Neeraj Shah, who's standing by to take us through the equity action that was witnessed in the Dalal Street today. Neeraj, the Nifty gave up all its gains in the last hour of trade.
Yeah, it was a good day, but a disappointing close. You would have to mention that, and which is why we ended the day flat. Optically, it may look just a marginal downtick, but we were trading well for most part of the trading day, and which is why this number is disappointing. The market breadth too, by the way, corrected intraday. So while we had extremely positive market breadth for most part of the trading day, I think we just succumbed to a lot of selling pressure towards the second half, and it showed in the way the broader markets performed as well. Let's talk about the movers and shakers. The crude oil spike clearly led to both gainers and losers on the large caps as well as the mid caps, but I've marked some large caps. So ONGC about 3.5, nearing the 200 mark. HPCL and some of the other OMCs fell off. HPCL down about 2.5% in the session today. The new kid on the block, Reliance Nippon AMC, you would argue that it's probably done just about what the market anticipated it to do. Didn't do anything. We didn't see any kind of post-listing buying in a big way. But let's wait and watch if that improves over the course of the next few days. Select PSUs did extremely well. So Hindustan Copper, MMTC, State Trading Corporation, strong double-digit gains on strong volumes. Let's see if it is the Dredgen Corp effect or is there something else that is at play here. But these stocks continue to rise and shine. So good going for these names. Not the best of days for the brokerage stocks. Almost all of them came off. Motilal, Edelweiss, IIFL and a couple of others. JM Financial came off to MK Global marginally in the red. So these stocks were not having a particularly great day in trade. And then, of course, last but not the least, new highs for a clutch of names. I've picked up two which have been showing an extremely strong momentum and they continue to rise. Rain Industries as well as Graphite India. So all in all, an okay day, but a weak close.
All right, thank you so much for all those updates, Neeraj. But yet another stock that was in focus today was Reliance Communications, whose shares hit the lowest level ever after some of its lenders voiced concern over the restructuring plan. This also comes at a time when the debt-trapped telecom operator has to make a bond coupon payment by the end of the day. Now, Vishwanath Nair, who broke the story on Friday, joins in with the details. Vishwanath, what's making the lenders uncomfortable?
The Anil Ambani-led Reliance Communications new resolution plan, debt resolution plan, is likely to not get approval from its lenders. What is the reason? Well, the reason is this, that the conversion rate at which the company wants the banks to convert debt to equity is too high. What the bankers are saying is that the stock is not worth that much, and possibly you could reduce that so that the amount of debt that is being converted into equity could come down. Apart from this, the plan also does not detail how the company is going to achieve its asset monetization plan. Now, if you remember, the plan which was submitted on the 30th of October said that the company would monetize about 10,000 crore worth of land parcels and 17,000 crore worth of other assets which Reliance Communications owns. However, the company did not provide to the lenders any details on how exactly it was going to sell this, who exactly it was going to sell this, and when these sales would be completed. The lenders have asked the company to go back to the drawing board, come back with a better and a reworked plan, and call for a second meeting sometime later this month so that they can be convinced. Now remember that before December 2017, the lenders have to convert their debt into equity under the strategic debt restructuring norms. Apart from this, they also have a standstill. The ARCOM, the company, also has a standstill on its account classification till December 2018. So it cannot be classified as an NPA for at least one full year. The banks want this to be resolved before that so that they don't have to provide a lot against ARCOM, which has a debt of approximately 45,000 crore.
Thanks for that, Vishwanath. Not so surprising that the Reliance Communications stock closed 6.2% lower at 15.85. But there's been no such worry as far as another Anil Ambani Group company is concerned, Reliance Nippon. That became the first Indian asset management company to get listed on the exchanges, and that too at a premium of 70% to its issue price. Now, Somit Sarkar joins us with the details. Somit, the listing was on the expected lines?
Yes, the listing was on expected line. Street was expecting a premium of about 40 to 45 rupees and it came off at that number, but it ended lower at 284. Now, Reliance Nippon is the third largest asset management company in India after ICICI Pru and HDFC AMC. The market share of Reliance Nippon is close to 11.4% and the asset under management is close to 3,84,000 crore as of August 2017. Now, if you see the financials of the company's revenue and net profit grew at a compounded annual growth rate of 21% and 15% over FY13 to FY17, which is at a lower rate when compared to ICICI Pru and SBI funds, but at par when it comes to HDFC AMC. Now, if you see the return ratios of Reliance Nippon, it is the lowest when compared to its peers. Now, the return on equity is close to 22%, while return on capital employed is around 25%, which is the lowest. And when you compare it with ICICI Pru's return on equity is around 3 times that of Reliance Nippon, and the return on capital employed is almost 4 times that of Reliance Nippon. So the stock closed at around 284. So let's see how the valuations stack up at the closing price. Now, at the closing price of 284 rupees, the market capitalization of the company is close to 17,380 crore rupees, while price to earnings is 43.2 times, and market cap as a percentage of asset under management, which is one of the important metrics when it comes to an asset management company, stood at 4.5 times. So is this cheaper? Yes, it is cheaper when compared to the valuations at what its promoter Nippon Life bought stake. Now, Nippon Life bought stake in the company in 3 different stages, that is in 2012, 2014 and 2015, and the valuations at that time were expensive. Now, in 2012, it bought stake at 6.6% valuation, and in 2014 and 2015 at 5.6% of the valuations.
All right, so valuations don't look like a concern, at least when compared to what prices Nippon entered or hiked stakes at. Thanks for that, Somit. But we also had Yatin Mota, who caught up with Sandeep Sikka, the Executive Director and CEO at Reliance Nippon. Although the AMC plans to tap the international markets, he says the focus will remain on India. Listen in.
I think we clearly see ourselves playing a bigger role, getting a bigger share of the money coming into India. So as Toda-san already mentioned, we have $1 billion fund in Japan. We are giving an opportunity to Japanese retail investors to participate in the India growth story. Going forward, the Thailand fund we touched about. Also, we are trying to do a few things in US and Europe. So clearly, I mean, we see ourselves being a India-focused asset management company, whether raising money in India and investing in India, or giving an access to foreign investors to be given to the Indian markets. So we will clearly we will try to leverage the relationships of Nippon Life across the world, which we have successfully started in Japan, Thailand and some other parts of the world, and that will keep increasing going forward.
Okay. And Sandeep, one final question. Since you are not a banking institution, unlike your peers like HDFC Mutual Fund or ICICI Mutual Fund, which have a bank parentage, so in terms of distribution and in terms of reach, how do you plan to ramp up your operations? Is there any specific tie-ups that you have planned moving forward? You are already present in some banking channels, but independently in terms of branch operations or in terms of reach, how do you ramp up the overall distribution reach and penetration?
No, I think the way we see, yes, you're right. I think of the top 3 asset management companies, we are the only one which is not sponsored by a bank. We don't see that as any disadvantage, rather we see as an advantage. Today we have all the banks in India, the banks that you talked about, and other private sector banks, public sector banks, they sell our products. We also have 58,000 IFAs across the country who are selling our product. So we have a right mix. The way we have done it from a distribution point of view, no distributor is for more than 4% of our assets. I think we'll keep expanding both in the physical branch network as well as in digital. I mean, at this point of time, 20% of our incremental new transactions are coming through digital. And one of the object clause of the issue of the money that is coming to the company is 2 things. A is opening further branches, which from 171 will go to 500. And also investing a lot on more in digital, which we believe is going to be very important in times to come.
All right, moving forward, Unichem Laboratories announced its plans to return more than half of the net proceeds it will receive from the sale of domestic formulations business to Torrent Pharmaceuticals to its shareholders. Now, Bloomberg Quint's Darshan Mehta caught up with Unichem's CMD Prakash Modi to discuss Unichem's international expansion plans and more.
Once there is a slump sale, you have to pay the tax, then the company has the proceeds. Okay. Those proceeds get divided, in my case, only into 2 things. One, developing the second business, which I think has great opportunity, and whatever is not required will be returned to the shareholders.
So how much you're getting 3,600 crores? I'm sure you have the calculations at the back of your mind, because without that you wouldn't get into this deal. So there'll be a tax, let's say 20% or whatever.
I can just cut you short by saying more than 50% of what we are able to retain will be given back to the shareholders.
Is there a potential that you would look to sell your international business also at a later
stage? See, today if I wanted to sell, I should have sold the whole thing, right?
Yes.
I feel there is still a lot of value to be unlocked in my international business. That's why I'm prepared to take the sort of situation wherein I have confidence that I can build that up. That's why I'm not talking of doing anything right now. Let me build some value, then we'll see.
You're confident that it will be closed by the end of the year?
That's the intention on both sides. But you know, there's always an issue in terms of anything can happen. The good part about this deal is there are no regulatory approvals involved.
All right, let's revisit the top story on Bloomberg Quint right now. This week marks 12 months since the Narendra Modi government announced demonetization. Now, in an interview to Bloomberg Quint, the former Prime Minister Manmohan Singh talks about the impact of demonetization on the independence of India's institutions, namely the Reserve Bank of India. He says, and I quote, "The RBI was bypassed and overshadowed in one of independent India's most significant monetary policy decisions. This is a cause for concern. I am not for a moment implying complicity of the RBI, and I'm very sure that the RBI did not have a choice." You can read that full interview on our website, bloombergquint.com. Large acquisitions are not sustainable in the long term. That's the word coming in from the Joint Managing Director and Group CFO at JSW Steel, Sheshagiri Rao, in a conversation with Bloomberg Quint earlier today. He talks further about the company's earnings and states that the second half of the financial year will see better margins. Now here is an excerpt of that conversation. Listen in.
Today I am hearing a lot of noise in the market that the companies will bid very aggressively for these steel companies to acquire capacities, which in my view is not so.
Okay.
Because today, if anybody invests a very large sums of money for creating 1 million ton or acquiring 1 million ton, then it is not sustainable in the long term. So it should be very, very careful. The investors are quite aware, whoever is there, existing or a new player, that if any acquisition has to be done, it has to be a sustainable price. It has to give returns to the shareholders. So from that point of view, if you look at the kind of assets which are there, there is a large amount of debt. So it involves, in my view, a significant haircuts from the banks in order to ensure that these assets are nursed back to normalcy, and the acquirer will be able to really give a good resolution plan. It is essential that the haircuts will be significant in these cases.
I want to talk about both organic growth, that is the expansion of capacity, as well as it's no secret, sir, that you are interested in some of the stressed assets that are currently going through the insolvency process. I think your company and you specifically have made it clear that you might be interested in assets on the eastern coast of India. You're viewing these insolvency processes at this point in time. So let's talk about the inorganic bit first. Where do you think you might be in the process of being able to participate in these insolvency processes?
Inorganic growth is part of our growth strategy. So when we became 1.6 to 18 million ton over a period of 15 years, we acquired stressed companies, we turned around. So we have a track record in turning around these stressed companies. So inorganic growth is part of our strategy. So in a similar breadth, we have been evaluating various opportunities that are available in India.
So very quickly, can you tell me how much money you're keeping or how much powder you're keeping dry for the inorganic strategy? I'm sure you're interested in Bhushan and Monetization. So whichever one you are able to get at whatever price that works for you, how much money are you hoping or willing to put to it?
We have a strong balance sheet. If I look at last year, we had a net profit of 3,500 crores and we had an EBITDA of 12,200 crores. Even our first half results are quite strong. So taking into account our financial numbers, I think we have adequate cash generation within the company to plan our both organic and inorganic growth. So that is how we are planning to do it. But only two financial policies are very important for us. In that we said we will have a debt equity ratio of 1.75:1 and debt to EBITDA of 3.75:1. So within these two ratios, we craft our organic and inorganic growth story, and accordingly we will raise the resources for that.
You don't expect, you think that at this point in time, both iron ore and coking coal prices will flatten out? Is that your expectation, to be more specific? And secondly, this additional demand that you're talking about has also been met by additional imports in the last couple of quarters. You don't expect that import pressure to continue in the next few quarters?
Number one, the China already has peaked in terms of overall steel production is concerned. I don't expect further increase as regards to the prices of as regards to the steel production. Therefore, there is a more supply of iron ore coming into the market. At the same time, coking coal is also coming into the market. Okay. So the increase in the iron ore and coking coal prices from the current levels, I don't expect to happen. At the same time, the imports into India, we have been bringing to the attention of the government that the last quarter there is a significant increase in the imports of steel products into India. So therefore, it has to be looked at why these imports are coming when the domestic prices are at a lower level than the landed cost of imports for some of the products. So we expect some moderation as regards to the imports, because some of the imports which have come in the Q2 were booked when the prices of steel internationally were lower.
Okay.
So the imports into India should moderate in my view going forward. Hence, I expect the second half in terms of margins, in terms of demand, in terms of moderation of imports, better than the first half.
We're almost on to the 1-year anniversary of demonetization, yet the debate is still out there as to what impact this had on the economy. Earlier in the day, of course, we were joined by Sajid Chinoy, the Chief India Economist at JP Morgan, to understand the implications and to assess where the economy would have been if demonetization wouldn't have happened. Hear what he had to say.
In our view, growth began to slow much before demonetization. If you look at the numbers closely, GDP growth between April of 2016 and September of 2016, before demonetization, slowed by almost 200 basis points. It's important to understand the macroeconomic context here. Growth was already slowing in the quarters before demonetization, both because the oil windfall had begun to roll off and we were getting very serious about bad asset recognition and the deleveraging process. A couple of things I think are quite clear. One is there was a transitory near-term growth hit for a couple of quarters. So absent demonetization, GDP growth would have been a little bit higher. The second was, in our view, we've had a temporary adverse supply shock. And what I mean by that is supply chains involving small, medium enterprises in the informal sector have been disrupted, and that activity has been replaced by much stronger imports, manufacturing imports. And that's the only way to rationalize why, even as domestic demand has been slowing the last 3 or 4 quarters, imports have been accelerating. So, you can reconcile those things when you recognize that this could have been an adverse supply shock.
Also, the West Bengal Chief Minister Mamata Banerjees has found a unique way to mark the day, calling the note ban a scam. She urged her Twitter followers today to change their profile pictures to black to protest against the scam that destroyed the economy. Mamata herself has changed her Twitter display picture to black, and in another tweet, she dubbed the GST as great selfish tax meant to harass people. She said that the government of India had failed to tackle GST and it was hurting businesses and taking away jobs. Now, the Trinamool Congress had earlier announced it would observe a Black Day on November 8th to protest against demonetization across West Bengal. And before we close the show, there's a reminder of Bloomberg Quint exclusive interview with former Prime Minister Manmohan Singh. It's been a year since the Narendra Modi government announced demonetization. And while there may be severe differences between how the BJP and the Congress view the impact of this on the economy, Dr. Singh tells Bloomberg Quint that the time for politicking is over. He says, and I quote, "I strongly feel the time for politicking over demonetization is over. It is time the Prime Minister graciously acknowledges the blunder and seeks support from all to rebuild our economy." You can read that full interview on our website, bloombergquint.com. But that's all that we have on this edition of What Did You Miss? Thank you for watching.